Hello and welcome to Why Not Mint Money. This is Neil Borate from the Mint Money team. Today we're going to be comparing two interesting alternative options for resident Indians to invest in US stocks. One option is being offered by the National Stock Exchange through its subsidiary in Gift City, Gujarat, the NSE IFSC, and the other alternative is being offered by the Bombay Stock Exchange BSE through its subsidiary in IFSC Gujarat, and that subsidiary is called India INX. So first let's understand the two different models that are being followed by the two subsidiaries. NSE IFSC is offering trading in unsecured depository receipts of large US companies. Eight such companies have seen trading start already in their unsecured depository receipts. So, what is an unsecured depository receipt? Basically, a market maker buys the physical shares in the US and it issues receipts against those shares in India, and that allows those shares to be indirectly traded in India in Gift City. Um, Currently, eight such scripts are being traded, including big tech companies like Apple and Amazon. And the plan is for eventually for 50 such companies to list through these depository receipts. BSE, through its subsidiary India INX, is going down a completely different path. They are offering access to the US market or markets around the world, but not through Gift City. So, although BSE is an exchange, in this case, they are acting more as an intermediary. They allow you to access a US broker, in this case, Interactive Brokers, and directly access the US market with the entire range of stocks and ETFs and bonds in the US market. Now, what are the pros and cons of each kind of model? Um, if you just want to trade in a limited number of large US companies, then the NSE model might well work for you. They might expand the number of receipts going forward, but it is unlikely that they will be able to offer the full range of stocks listed in the US and other parts of the world through this form of depository receipts. Also, currently the NSE model is being launched through a special regulatory sandbox of the IFSC, and so it can only onboard a limited number of customers, according to a note put out by stockbroker Zerodha. In addition, the Zerodha note adds that there are significant costs involved in trading in depository receipts on the NSE, which amount to roughly 0.12% per trade from the exchange, and that's in addition to any costs that the brokers through which you access this Gift City exchange, any commissions that the brokers charge. On the other hand, the BSE route right now does not involve any exchange charges or broker charges, although that can change in the future. We don't know. And there, since you're accessing the underlying stock itself, you're directly buying an Apple share instead of a receipt in Apple. There is more liquidity. There could be a liquidity issue with receipts. We don't know. That's something to be tested. So, if you want the whole gamut of stocks, bonds, and ETFs outside India, then the BSE route might be the one for you. But there are two risks to keep in mind. Number one, you will be transferring money from India to the US or whichever global market you are accessing, and the money then is placed with a broker in that country, and if that broker goes bust, then there is a risk of you losing your money. In the NSE case, since the money is sitting in Gift City and the trading happens in Gift City, there is a certain comfort of an Indian regulator, the IFSC authority, overseeing all this and preventing any major issues that cause investors to lose money. So the answer really depends on you, what you want, what you're comfortable with, um, and what works best for you. Thank you very much for listening, and goodbye.